All down. All silent. Going. Gone. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another edition of Current Market Insights. I'm your host, Kieran O'Brien, and with me is Mr. Peter O'Malley. Peter.
Kieran, good afternoon to you.
Good afternoon, my friend. Let's spend today, Peter, catching up on the Sydney property market. It's been a couple of weeks since we did a proper market wrap, and if anything, since we last spoke about the issue and what's happening in the industry and the market more broadly, if anything, things have just kind of escalated across the world. It's a crazy time. Given everything that's happening, we don't necessarily need to narrow in on global specifics, but given everything that is going on, I'd love to start the episode by getting just a bit of a timeline and trajectory of how the market's been evolving over the last few weeks since we last spoke. As a selling agent, first and foremost, how's it evolving from your perspective? And then let's flip it a little bit and I guess try and analyse what that looks like as we move forward now, given we're entering a bit of an uncertain period economically, globally, etc. But to kick it off, over the last, say, 4 to 6 weeks, as a selling agent, how have you seen the Sydney market evolving?
Thanks, Kieran. Look, it's been deteriorating on a weekly basis.
Right.
So buyer confidence in the property market is shattered.
Yeah. So last time we spoke, we had just had about this topic, we just had a rate rise announced, and you had said, look, at this point, there's no real activity yet, or it's not being felt necessarily outwardly. Might have been felt in the people's living rooms, but it wasn't being felt out in the market. You're now saying that the confidence is shot across the market.
Correct, and I'm not in Robinson Crusoe on that point. Agents across the industry are reporting the same thing.
Yeah.
So there's still buyers out there, but to give you an idea, if it was a property that in a normal and stable environment might attract an average of 8 to 10 people per open inspection, that's now down to 3 or 4.
Yeah.
A property that might only attract 3 or 4 per open inspection is down to 1 or none.
Yeah, wow. Which is disheartening as a seller, first and foremost.
Yes, it is, but if you're looking to buy, there's an ability to transact there.
Yep.
It's highly ill-advised to purchase a property before selling in this environment. But right through March and into April, we've just seen a steady decline week on week with the market confidence. There's no doubt.
Is there any other element from the seller side that's contributing here? Do we have vendors out there that are hanging on to optimistic, pre-Christmas prices, or is this mostly just driven by the buyer confidence side, do you think?
I just think from the buyer's side, there's just too much to absorb at the moment. There's been the Middle East conflict first and foremost. Are we going to run out of petrol as a side effect to that? Is the fuel issue going to cause inflation to go to ridiculous levels that cause and force the RBA to increase interest rates accordingly? Will the RBA increase interest rates in May and June, as many suspect? Is my job safe?
Yeah.
Is the economy going to be able to turn over? Probably one of the few things that have held at the moment is the stock market. Obviously, it's been a bit volatile, but it's held. But there's just too much for buyers to absorb at the moment, and they're voting with their feet at the moment, and they're reluctant to partake in the game. Now, look, this could turn out to be a good buying opportunity.
Yeah.
As we record today, Trump and Iran claim that they're ready to let ships sail through the Strait of Hormuz again, and that'll be a good thing if that holds. So the period we've just been in might turn out to be a good buying opportunity. Probably not in the short term, but we have seen, and people have pointed this out to me, including Chad, who edits the podcast for us, that he's noticing properties that have sold for less than the owners paid in the last few weeks. Not widespread, but he's noticed a couple of examples as we have as agents. So that is going on out there. Now, if you sell for less than you've paid, obviously you've got the straight drop on what you paid versus what you sell for, but all of your transaction costs are a write-off. Transaction costs to buy and sell are is somewhere in the order of 8-9%. So if you've got a capital loss on top of that, that can be quite expensive.
Yeah, exactly. I mean, we did an episode on this a couple of months ago now where we talked about that transaction difference, and that 10% below what you paid is suddenly 20% in certain markets with those transaction costs, which is obviously very significant. A couple of things there. I'd love to get your thoughts. We talk about all of the conflict that's going on and how it's impacting buyer confidence. I'd love to get your opinion on how much of that you think is negative news media versus reality. And, I use the fuel as an example. Looking at, tables, looking at the allocation of barrels that we have in the country, et cetera, at the moment, we're at the highest levels that we've had in reserve for like 2 decades or something like that. Yet the rhetoric around the country is that we're completely out of fuel and we've got no supplies and it's terrible. And I can't help but wonder just how much of the negativity and kind of concern that we have in the market more broadly is based on what ifs as opposed to what is currently happening. The negativity that drives engagement is in some ways corralling behaviour as opposed to being a true reflection of what's actually going on.
Yeah, look, it's a great point you touch on, and we'll never really know what the cause of the buyer behaviour is until some of these issues start to alleviate themselves. So if the Strait of Hormuz is open and remains open and ships are sailing through and fuel is moving around again, it'll be a temporary inflation spike and fuel issue. Already the price of oil is coming down over the weekend now on this news, and markets celebrated it overnight. So if the Middle East conflict is contained, well, that's an issue that's essentially off the table, right?
Yeah.
So if that was the root cause of the downturn the market's experienced in the last 6 weeks, well, it begs to reason that the market will bounce back next week, which it won't.
Yeah.
So, look, I think it is more fundamental than sentiment-based. Look, I don't protest, to be a oil expert by any means, but what I have read about it myself is that Australia is reliant more so than nearly every other nation on supply chains.
Yeah.
So when the supply chains are broken the way they are, the Northern Hemisphere countries and the self-sufficient countries are sorted, but we, probably because we're optimists at heart as Australians, our fuel position is highly reliant on global trade and global goodwill and supply chains, and that's been seriously under threat in the last 6 weeks, as we know. So it'll be a very good story for Australia if the Middle East conflict is contained. But regardless of that, the one that we can't get away from is that the 3 rate cuts of 2025 are nearly reversed. They certainly will be reversed, all 3 of them, when the RBA hike in May. And then if they go up in June as well, that means that interest rates will, in mid-2026, be higher than what they were in late 2024, which is extraordinary.
Oh, look, it certainly is. And it's definitely, as much as I'm an optimist and I love the idea that the economy will recover and we won't have to go through this, the government's clearly concerned about it. I mean, only this week, I'm not sure if you've been following the news, but, New South Wales nurses got a pay rise, which was terrible in the grand scheme of what they actually deserve. But regardless, they got a pay rise as something at least. And one of the arguments the government made for not matching what they were after is that if we paid you what you're worth, then the inflation will be out of control and we can't keep up with that. And I must admit, I find that incredibly infuriating that, the government's pinning inflation on essential workforce, which is clearly not the concern. But it does show, though, that they are concerned that inflation's out of their control at this point and they're not entirely sure what to do. And as you say, the RBA is very likely to raise from here at least 2 more times. Hopefully not any more than that, but only time will tell. The other thing we often talk about when we talk about inflation and we talk about the risk of stagflation is the jobs rate. Given it is a bit of an uncertain time, we've got, we're in the midst of the AI revolution of sorts, which is, seemingly going in 2 directions at once. It's got growth on one side and then resistance at the same time from a large, percentage of the population. Where do you think we're sitting economically? And do you think that the jobs figures are likely to change putting us at an even further risk of deterioration in the economy and then the market more broadly?
Look, I don't want to forecast out too much because it's not really my role as a real estate agent. And I've always said to people, I'm not particularly good at forecasting the market. I'm very good at reading it. And in our April newsletter, we highlighted the things that we're discussing today about the stress and the duress that's facing the market at the moment. But there are 4 points, Kieran, that are supporting the economy and the property market at the moment. The first is immigration.
Yeah.
And the federal government keeps saying to people, we hear you on immigration, we're cutting back. We've now got the immigration numbers for January 2026 and they're through the roof.
Yeah.
So what happens is the government's books, as we all know, when they have an open door policy with immigration the way we do at the moment, the government's books look better, but on a per capita basis or individually, we're all going backwards.
Yeah.
And the government is saying, aren't we doing a good job for you? Look at us growing the economy. Yeah, you're growing the economy by importing people. Individually, people are going backwards. A really interesting one that I saw during the week, you will know, I may remember from late last year, I said the Sydney rental market is going to rise how much this year?
Oh, I think you said between 5 and 10%.
I said clean 10%.
Yeah, right.
Yeah. And people were saying, no, there's not another 10% in it. It'll break affordability. Well, during the week, SQM Research put their numbers out, and in early April, rents in Sydney are up 7.4%.
Yeah.
So 10% is probably understating it. So it's
pretty close.
The thing that we've been saying for a long time, well, it's close in early April. The thing that we've been saying mid-April, the thing we've been saying to people for years now is the rental crisis is not finishing. It's only starting.
Yeah. Yeah.
When you have the government pumping in the immigration numbers that they are, and feasibility for new projects has only deteriorated in the last 6 months, there is absolutely no chance that Chris Minns will get up. There's no chance that Chris Minns will get up on his agenda that he outlined at the start of his term about all of these inner city apartments being built.
Even the big projects he's announced, Olympic Park, for example, the 2050 plan. I mean, it looks great, make a precinct, but it's a 2050 plan. We are in 2026, and 24 years is a very long time to absorb hundreds and hundreds of thousands of extra people coming in per year without the existing infrastructure. It's not, and as we sit here, at least from my perspective, I'm not anti-immigration. I'm anti-immigration without the facilities to support it. You've got to have jobs. You've got to have places for people to live and work. You've got to have infrastructure to get them around. There has to be things in place which just don't exist. And you can only import positive GDP for so long before, it's a house of cards like the financial crisis in 2008. Eventually the bad credits fall over and the whole thing collapses.
Yeah, well, look, I did see an interesting post during the week, and it's something that I have been sort of increasingly interested in, and that is if our economy did take a big turn, or there was a reason for all of the new arrivals into Australia to head back to where they've come from, and they just sort of toss the keys to this heavily mortgaged property they've purchased back at the bank and said we're out, and they just sort of slip off into the night. We've got our local banks here heavily geared towards the residential property market with people that have sort of, don't want to hang around. It was Ireland, actually. Someone was talking about when the Polish cleared out of Ireland, having pushed property prices up, and then all at once the Celtic Tiger was over, the economic boom there, and they all sort of bailed en masse at once and left, the local Irish holding the bag. And the Australian economy is far, far bigger and more diverse than the Irish economy. But it was just a really good point that is worth raising.
Well, I mean, as an economy, though, we are so heavily geared into property that it is a major component of the economy. I mean, realistically, the same thing, even though it's not immigration-based, the same thing happened in the US with the housing crisis. It got to a point where people just said, oh, well, I can't do this, and just threw the keys back at the banks to their 20 or 30 investment properties and walked away. And
Yeah,
it's
but that was American banks lending to Americans on non-recourse
no,
loans.
of course. But my point is, though, there are historical examples where the economy just has to accept people going, sorry about that, and just walking away as if nothing ever happened, and the money just,
Well, the banks wear it.
the banks wear it, but that eventually that flows downhill.
Absolutely.
The banks don't wear it for long. Is the point?
Yep.
You know.
Yep. And if the banks topple, they get nationalised, and then that means the taxpayer owes them. And what happens from there? Taxes go up. Yeah.
Well, I mean that's a good segue actually to talk about tax, because one of the things that's been proposed by the federal government is taxation reform.
Yeah, I did want to touch on the forthcoming budget. There's four things I think that are holding the property market up. So why is there not an outright collapse in this environment in property prices? Immigration's one, the rents is two, up 7.4% for the year.
Yeah.
Now you can say they're interconnected, which they are, but that is the importance of a strong rent or a rising rental market is if a homeowner is in duress and they can't sell their asset for a price they're satisfied with the rental market performing as strongly as they can get some respite there.
Yeah.
And that's really important. This is what we saw in 2022 when interest rates went up really sharply from their COVID lows, is landlords who said, I can't afford to live here, but I don't want to take a bath and sell out for a loss. I'll go to the rental market until the market recovers, which it slowly but surely did through 2023 to 2025. The cost of renovations and repairs is so high that people are saying my $2 million house might now only be worth 1.8, but I can buy a $2.75 million property for 2.5.
Yeah.
That sounds like a good trade to me, where I've just had the builder in to renovate my what was a $2 million house and is now 1.8, and the builder has said that if I want to do the renovation, it's going to cost $700 or $800. And there's a lot of people that are moving at the moment because the cost of executing the renovations is just too high. And you'll notice a lot of properties, if you read the copy, which a lot of people now don't because buying a property is so visual, but if you read a lot of the copy on properties that are out there at the moment, there's a subtlety with them, and that is selling with a DA approval.
DA pending.
Selling with the DA approval because it's too expensive to build at the moment. So that's if you've got to renovate a property at the moment, you'll enjoy good demand because buyers are not looking to do renos in this environment. And then the final one, which is what you touched on a bit earlier, the unemployment rate is steady for April. The figures came out this week, so at the moment there's no duress as far as jobs go.
Yeah. Look, I think for many of those, we are, though, reliant on factors that are outside the property market to hold the property market up, which, is really dependent on the government of the day. And a lot of these things that you talk about really do come down to government decisions. I started touching on it earlier, but one of the things that's been proposed by Jim Chalmers in this Labor government is to introduce some changes to the capital gains tax as a means of recuperating some extra revenue. Given that the government have just temporarily at least halted the excise on fuel to help with cost of living, do you think that, firstly, the government is likely to try and push ahead with these in the budget? And I say that, with a level of scepticism, given that last time Labor proposed taxation reform to the property market, of course, was the unlosable election where, Bill Shorten found himself looking for a new job. So I truly wonder whether, they're talking big as a measure of just trying to, pump up everyone's excitement, or whether they actually, whether you actually think they will try and make reform here.
I think they will. So let's go back to Bill Shorten. He did try rebalancing the wealth inequality, which was much narrower then than what it is now. I'm not sure it was a need then, but I understand where the government are coming from now, that's for sure.
Yeah.
But he was doing it from opposition.
Yeah, of course.
And he was open to the mother of all scare campaigns, and that's what he fell to. I partook in some of that scare campaign because I just think that you can't just pull negative gearing from the marketplace when property investors contribute so much taxation.
Yeah.
And okay, they get a benefit at times through negative gearing. And I'm actually not a fan myself of negative gearing. I like positively geared properties because it means money's going into your pocket. Sharing a loss with the tax man, means you're still getting a loss.
Yeah.
you're just washing some of it off with the tax man, which, I like profitable investments that put money into your pocket each month. But notwithstanding, the cynic in me, and all politicians are, at the end of the day, are essentially the same, as you know, Kieran. The cynic in me says that in the budget, they will use the fuel excise rebates, the environment we're in, as a justification for the tax reform and the higher taxes that property investors are going to have to wear from here. They're always going to have a crack at this as far as property investors go, because they were talking about it and planning and lining up to do it as far back as 2019 and as far back as late last year, before Trump had a go at Iran, which was on Saturday, February 28th. But they've now got the perfect excuse. Yeah. And I think the justification, whether it's real or not, is there now to say, the war's cost the economy so much, and it's going to cost the economy so much, so we need to get it back. And only those that are making a profit in the property market will just have to pay a little bit extra, and that'll be very hard to get sympathy for those people, politically speaking.
So given that we're in an environment where rents are increasing, immigration's increasing, we are, through taxation reform, if it goes ahead, actively attacking those property investors that are supporting that market.
Taxation reform, we'll see what comes out. That could turn out to be a very generous heading, by the way.
Yeah, look,
it might be an increase in tax.
Of course, yeah. Look, I'm just using the term because that's how it'll be spun. Regardless of what the outcome is, it will be, generational reform for the next, whatever. But regardless of how the government spins it, given that the proposal is to recoup extra funds through those that are propping up the, one of the major drivers of inflation because of all the factors we've talked about, what is, if they go ahead with their proposal, what's the likely impact on the market here, do you think?
The property market?
Yeah, well, the rental market and the sales market. For the investors that are now targeted, I would imagine there, plenty of people that see it as no longer viable or practical to hold property. And then for those that do hold on, as usually happens, the cost of doing business is offset in other ways.
Yeah, look, I just see it all playing out in the rental market.
Yeah.
Yeah, I think people will work with the tax-free status of the primary residence.
Yep.
Say who wants to be in property investment. If what is being discussed, and we won't go too deep into it today because the budget will be out in 2 weeks, and then we can
pick it apart. Yeah,
we can peel it back then. But what is being discussed is the capital gains discount will only apply to property investors.
Yeah.
So that's just going to push people into other asset classes.
Yeah.
Pure and simple.
Yeah.
And then you can say, great, we've made all of these homes available for owner-occupiers, but the would-be owner-occupiers are going to say, yeah, great, but I can't save for a deposit because my rent's just gone up 20% on an already excessive level. And that's what's happening with the rental market, is they're trying to help tenants and they're trying to get people into their own property. But every time the rental market jumps the way it does, the aspirational home buyer who's currently a tenant, their deposit is being absorbed in higher rent.
Oh, of course. And it's, everyone knows it's already incredibly hard to save in metropolitan Sydney for a deposit. Average income is 13 to 17 years to save a deposit at the moment. And it just beggars belief because we talked about this maybe 6 or 8 months ago. We were discussing, the Greens and Max Chandler-Mather and how he was always for reform like this because he has this utopian view that if you tax property investors, they'll just say, okay, well, I paid $1 million for this apartment, but I can't afford it, so I'll just sell it to a family in need for $250,000. And of course, that's just not how it works, right? Yeah, they may look to exit the asset class because it's not sustainable and they can't afford to upkeep, but they're not going to sell for a substantial loss to benefit someone else just because tax is on the horizon.
Oh well, look. What's been happening more so in the last 3 years, and we've articulated this in our podcast, is would-be landlords are not entering the market
at all. Yeah.
Yeah, that's the other problem because of land tax, council rates rising, all of the things that we know. So when the Liberal Party are in power, they will say things like Labor will be a big spending, big taxing government.
Which they mostly are.
And
yeah.
guess what we've got?
Yeah.
A big spending, big taxing government. Now, some people like that. They like that view of politics, which is take from the haves and give it to the have-nots, and spread the wealth around, and a lot of it in Australia is on the back of natural resources. So it's just you never know everything, and watching the Albanese government really, the Voice and everything that went with the Voice sort of held the Albanese government up while they were pushing that through. But since the Voice has been out of the way, just watching their ideological true north, if you like, since that point in time has been interesting, because they are a big spending, big taxing government. The NDIS is out of control.
Oh, I don't think anyone argues with that. Even them, potentially.
Yeah, that's right. Well, you've got Labor ministers who are doctors coming out saying this is just absurd and unsustainable and wastage. And, just to put it on the record is that I have no problem with government and social support for those that need it. But the tragedy is it's being rorted to the hilt.
Every time, like I am a huge advocate for the NDIS as a concept, right? But I always, everyone I talk to about this, I say it's pink bats all over again. It's school halls all over again. Wherever there is a government idea that sounds excellent on paper, it is exploited by people to the nth degree, and the taxpayer pays for it. And NDIS is the largest,
Yeah, but in fairness to the Rudd government, those other rorts, they got on top of those pretty quickly.
Of course, yeah.
We've known the NDIS as a rort, not we as in you and I, but as a society. We know it's been getting rorted for the last 4 or 5 years. When is somebody going to do something about it?
Look, I'm not involved, obviously, in its investigation, but I would say as someone, familiar with the industry, my guess would be that unlike a school hall that's an obvious kind of, or a pink bat installation where there's an obvious scam where there's no victim other than the taxpayer, analysing people's requirements from a disability perspective is very complex, right? And, I suspect this will go on until they just run out of money and say, okay, we're just going to can the program and we'll start again. I think that's the way it'll end up, because it's probably too late to recoup everything.
Yeah.
They're just going to have to wipe the slate. But we're not here to talk about the NDIS. We are here occasionally to shit on government or, give them a bit of grief when they're doing the wrong thing or making bad decisions. But as we kind of move forward then, I don't want to dwell too long on politics, but given the government, they're looking like they might make some of these changes. We're in a period of potential, heading towards potential recession. We've got inflation all over the shop. It's a crisis. Do you think there's going to be any respite in the market for probably sellers actually more so? Do you think sellers are going to have any comfort or luck over the next 3 to 4 months?
Let's finish on this back on the property market. It's a good point that you raised. Look, to give people some context, for the last 2 weeks on high auction numbers, SQM Research have recorded the Sydney auction clearance rate at 33% and 37% respectively.
I don't think I've ever seen it that low.
I have.
We've done a lot of talking in the low 40s, but definitely not in the 30s.
No,
not since we've
been doing the podcast.
Yeah.
But there are times where I've seen the auction clearance rate in the 30s, and that's where it is for the last 2 weeks. We're recording on Saturday afternoon. We won't get today's final figures until Tuesday when people are listening to this, so it'll be what it'll be. Maybe you can put it in the byline or something.
Sure. Yeah.
When it goes out there. So that's macro. Let me give you a micro story. We might finish on this, Kieran. I have a listing with a property with a signed contract offer on it.
Right.
The owner says, no, that's not enough. And I said, look, be very careful. Be very, very careful. You've got rose-coloured glasses about your own property, which you're not the first and you're not the last that'll have that. This is a good offer, and I don't believe there's a better buyer in the marketplace for your property than what this offer is. No, I don't want to accept it. I'm just going to take it off the market. That is code for you're off the job, I'm going to find someone else.
Yeah.
2 weeks later, just a courtesy call, Peter, I've given the listing to someone else. Okay, yeah, fair enough. I said, look, just so we're very clear here, the buyer that signed the contract with me is my buyer. You should really get an exclusion from them because, as I told you straight last time, and I'll tell you straight now, this is the buyer for your property. Anyway, the property goes on the market with an auction guide for less than the contract price I've got.
Yep.
Yeah.
Yeah.
So I'll send someone to the open house today. I say, go down to that open house and tell me how many people are there. There's one party there.
Yeah.
That's the brutality of the current market.
Yeah. Even below the existing offer, there's no interest.
There's no interest.
Yeah.
Yeah.
Which, and that more than likely that seller is going to learn a very expensive lesson.
They will not be the only vendor to learn a tough message out of this. There's been, we have come since 2020, $100,000 on your BAS, low interest rates, have some cash. Are you okay?
120% claim,
Don't get upset at us. We're the government. We're here to love you and help you. We've been in a massive liquidity boom that is now over, and we are back to some of those markets that I have seen in the past where the auction clearance rate's in the 30s. So we're talking the credit squeeze in 2018, for example.
Yep.
The GFC in 2008, early 2009. Back to Bob Carr's investor tax in 2004, where he wrong-footed the budget and just invented a tax out of thin air on property investors. Surprise, surprise. And that really hurt the market at that time. So we're in that sort of genre at the moment, and vendors need to be really careful, and you have to respect an agent who tells you what you don't want to hear. But if they can back up what they're saying with logic, you need to take a good look at it, because you can, grab your bat and ball and say, I don't like you, Johnny down the road is a better bloke than you and is going to do better by me, until you're down there with Johnny and you realise that you've got a different real estate agent sitting in front of you, but the same problem. You want too much for your property relative to the current market.
Oh, and as you've said, in different circumstances to this, there are certain times in the market cycle where sellers cannot afford to be choosy, because the buyers will just walk down the street and buy that other property where the owner is a little bit more realistic, or they've come back a little bit and they're getting 10% off a better property to now match their original offer on yours. And, very, very quickly you can learn that you're stuck holding the bag.
So, yeah, exactly right. So to summarise, in a good market, buyers are competing for properties.
Yep.
And in a market like this one, vendors are competing for a buyer.
Yeah. Yeah, and that's, even in the context of interest rate rises and all of that, the buyers still have the power right now. Look, really interesting times in the market, Peter. Great discussion today. I think it's going to be an interesting few months ahead. I hope people are aware that there's a storm to weather yet. But as always, I really appreciate you coming in and talking with our listeners.
Yeah, pleasure. Thank you, Kieran.
Thanks, Peter, and thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.